Hello, welcome back to Core Finance. I'm Matt Brown, joined by Campbell, financial analyst at Spreadex, and we're going to look at the FTSE. Well, look, previously we've seen a pairs trade almost between the cable and the FTSE, and that seems to have diverged a little bit because I think people are just looking at what's going on in UK PLC with, well, not much favour. The FTSE 250 as well is not performing. So let's have a look at this. Where can we go? I mean, we were above 7,500. 7,400 looks like the next level. Maybe we see a bit of resistance, support there, I should say. What to look out for?
You have to feel a bit sorry for the FTSE, really. Like, it sort of just can't win. Like, you know, it had that huge surge after the Bank of England raised rates because the pound plunged.
Yes.
But then, like you said, that trade, which has been the trade really for most of the year, maybe since Brexit, really, that, you know, whatever the pound's doing, the FTSE is doing the opposite. We've seen in the last week or so, even with that, the FTSE has really struggled. Even yesterday, when the pound was falling, the FTSE really couldn't get much going. Then it ended up falling towards 7,400. I think, like you said, last week especially, it had a horrible time with its retailers. Like the retail stocks were in serious trouble. That's likely not going to improve this week. I think the retail sales figure on Thursday is meant to bounce from minus 0.8% in September to 0.2% in October, but that's still not great.
Yes,
that's not great, especially since we're a bit out of. Figures reflecting any Christmas rush, but still, we're building towards that, and there doesn't seem to really be any positive momentum in terms of that. And you could end up getting some fairly unpleasant like-for-like comparatives between last Christmas and this Christmas, just due to inflation. Again, Josh report on Wednesday, the wage growth is expected to dip, including bonuses from 2.2% to 2.1%. Again, widening the gap between inflation and wage growth. Real wages continue to fall. There's just not a lot. It's just hard to find any positives for the pound FTSE. Our clients have been. It's pretty mixed, but they have been buying around the 7,400 mark. There's enough buyers, I should say, so to suggest that there is perhaps a bit of support there. It's still fallen nearly 170 points in week and a half, 2 weeks. You have to be sorry because it never really got the balance it could have when the Dow and the DAX were rising, and now the Dow and DAX are sort of struggling a bit. Now the FTSE just sort of caught up in that as well. So it never hit the highs it should have, and now it's back to sort of just wider uncertainty. Like you said, there's political uncertainty in the UK. I think that's perhaps what prevented the FTSE from fully revelling in the pound's decline on Monday. Because whilst, it's all well and good that the pound was falling, it was falling for things that affected the entirety of the UK, not just the currency. I think that sort of hampered any, runaway growth from the FTSE. But like I said, very much from our clients, but enough bias to suggest that it could find some support around 7,400.
And the data releases, do you think these will get the FTSE going again? I mean, I think probably the key, the jobs number, if we see an improvement in wage growth, which is unlikely, it's probably going to drop slightly, but if we see a stark improvement in wage growth, I think that may be an impetus to get the FTSE going. Inflation, retail sales as well, maybe. But is there anything really in there that's juicy enough to make the buyers want to come into the FTSE?
I think, again, we were saying that the sort of the pairing of the FTSE and what it's doing in relation to the pounds, I don't think that's completely over. And we could see a return to that later in the week if the political situation quietens down and does become more data focused, then you could see that pairing again. In terms of the figures themselves, anything that perhaps suggests a slightly brighter retail situation could help because, the retailers took a bit of a hammering last week and the supermarket stocks and things like that. Beyond that, there's enough commodity stocks that if you see a bit of a balance in those towards the end of the week, that can always help the FTSE out. But even then last week, there were positive signs for the commodity stocks for a bit and the FTSE couldn't hold onto the gains. So I do think it is going to be dependent, probably still on what the pound does. Perhaps not as much as it was a few weeks ago, but I still think there's the remnants of that pairing still there to define the trading for the rest of the week at least.
Good stuff. Well, Connor, in the meantime, thank you very much for joining us.